All right, welcome back to Market Shares. I'm your host, Tony Blodgett, and the gentleman sitting next to me is someone that you all know if you watch this episode, Coach DK. Welcome back to the show.
Hey, this is going to be fun.
Yeah, I'm looking forward to this conversation. We were just talking earlier, and we thought, hey, this is something that we need to share with everybody. But you were sharing with me an article and some statistics around the fact that I think it was something like 88% of home buyers said that they would use their real estate agent again if given the opportunity, but yet only 11% of them actually do use the same agent again. And I think that is a very shocking stat and something that we can learn a lot from. And I think there's a lot of different ways that we can talk about what that means and what we need to do to really engage at a deeper level with our clients. And it's more than just people that have done a transaction with us. There's so many other ways to go with this. So that's what we're going to talk about today.
Yeah, and so we're not here to lecture real estate agents. That's obviously not the reason, but I saw this headline. We're mortgage professionals. We have databases just like realtors do, right?
Yeah.
And so I think this is something, two reasons. You're going to get two value points out of this today. One, we should be connected with our realtors daily, if not weekly, talking about, getting good content out to our database, out to help them get content out to their database, staying in touch, teaching them the importance of staying in touch because the statistics just don't lie. Now, the other part of it is we all have databases. We should be taking really great care of our people, and I am guilty. In fact, Tony's going to grill me here in a minute because I'm going to share a formula with you where you can audit. Are you doing a good job or not? And I think I'm going to get I can tell you in advance, I'm probably going to get about a C+ on this exam that Tony's going to run me through here in a minute. But this is going to be really good, you guys. So the reason why I think this is important, because you've all met a real estate agent that on the back of their business card it says, "We love nothing more than your referrals. I heart referrals." Cool. A typical agent earns about 42% of their business from repeat clients and referrals from past clients. Get this, 82% of all real estate transactions come from repeat and referral business. 21% of agents get more than 50% of their business from referrals and past clients. And 92%, this is big, 92% of consumers trust recommendations from friends and family members above all other forms of advertisement. And then the last one, 82% of real estate sales are a result of a referral to a realtor from someone who has bought or sold with them, okay? So if you don't already think that this is an important topic, the stats just don't lie. This is from NAR, National Association of Realtors.
Yeah. So it sounds like people are getting more referrals from friends and family than they are necessarily just their past client reusing them again, unless you've done a great job of staying in touch with your past clients. Because the first headline was 88% said they would, but only 11% do. So even if you had a great experience with a real estate agent or a lender, I would argue, but then I'm in the process of looking for a new home and you recently went through the process and you said, hey, use this guy, he's great. I'm probably more likely to use that recommendation than I am the past guy because I forgot who they were in most cases. Yeah.
Then to go on the internet and search or whatever. And so, a recommendation or referral is, hey, we're still in a referral-based business.
100%.
Yeah.
100%.
So with all of that said, taking great care and staying in front of your past clients is more important than ever, real estate agents and lenders, okay? But from a lender standpoint, what can we do about it? Because we all have databases too. And so you and I were talking before, and we were kind of making a joke about it, and then you flip the script on me and go, okay, well, you're a producer, you're a top producer, let's look at your numbers. So let's consider this. Here's the formula, and I want you guys to take this test too. The National Association of Realtors states that people transact. They'll sell their home or they'll buy a home every 7 years. Okay, so if you have 100 people that you know, those people every 7 years are going to buy or sell. So
15% per year
15%.
Of that. Yeah.
So let's just scale it. Let's say I have 1,000 person database. 15% of 1,000 is 150, right?
Right.
So in theory, I should get 150 referrals or transactions a year by having 1,000 person database.
And that was the question.
And that was the question to me. And I said I did not get 150 closings or referrals last year from my database. In fact, I got 37.
Yeah.
So that's not good enough. That's a C. An F would have been 0.
Yeah.
So I'm giving myself some grace. An A or an A+ would have been in the hundreds, which I don't even want to get into this. I have more than 1,000 in my database. So I did not do a great job. Now, if a top producer like me who manages his database, I guess okay, not great, could do better, I think we all could do better. So I'm willing to fall on the sword here in front of everyone to make a point. We need to do better keeping in touch with our past clients.
Yeah.
And this is the point, and this is how we do it. So over the last year, I've tried to get better at this, a 6x12 program that we teach here at New American Funding. I'm implementing it. I've taught it a couple of times, and it's really simple. 6x12 means 12 is a year. We want 6 touches, 6 ways to touch our past clients over a year. Looks like this. 1, we're going to meet and visit. We're going to schedule a coffee. Or happy hour. They can decline or they can attend, but at least they're getting the invite twice a year. Okay, so a face-to-face visit twice a year. Number 2, we're going to call, physically pick up the phone and call 6 times a year. Okay, now, what are you going to call them about? What are you going to say? I don't know. People have birthdays. People have anniversaries. There's 2. If you have them fill out an All About You form, you learn a little bit more about the person. So if they're a big UW Husky fan and they make it to the bowl, hey, I saw the Huskies on TV. You get the point. You find ways to call them. Hey, I was driving by your house the other day. Number 4, I just came up with 4 reasons to make a phone call. There's nothing wrong with, hey, I was just thinking of you today. I was doing a transaction with your realtor and I was thinking of you, okay? So anyways, we're going to call 6 times a year. We're going to text 6 times a year. So you're going to call and or text once a month, okay? Number 4, we're going to mail. Direct mail is not dead. Direct mail, the open rate on direct mail is 100%. The open rate on email is about 20 to 30 if you're really good, okay? So we're going to direct mail. That's a letter of the heart. That's a newsletter. That's a birthday card. Something like that's an invite to an event. All right, so then number 5, we're going to email once a month. We're going to send them a video email once a month, and it could be out to your whole entire database. And lastly, you're going to hold a minimum of 1 client appreciation event a year, okay? If you do this, if I do this, I'm coaching myself right here, Tony. If I do this, we'll up that percentage rate. Think about this. 1,000 people in your database. 15%, that's 150 deals a year. We're looking at missed opportunities right now, and this is a big missed opportunity in our industry right now.
Yeah. Well, I love that, and it's a formula, and anyone can follow it, and it seems easy to me. We need to not be as concerned about having a relationship with our database. And people really seem to get hung up on, well, what would I call them about or what would I text them about? Like, people love it when you just reach out and say hi. There's nothing wrong with that. So, don't be so intimidated by that. But one other thing I want to hit on really quick, Dan, I know we don't have a lot of time here for this episode, but I have to imagine that the same thing happens just during the life cycle of working with a client in today's world, because there's so little inventory, rates are very volatile, and someone could reach out to you who wants to sell their home, buy a new home, and that could take up to a year because they're nervous about selling their home. There's not the right home out there, so on and so forth. Or even if they're a first-time home buyer. I mean, lead incubation seems like it's more important than ever. So I'm kind of putting you on the spot here, but do you think that you could just adapt this to how you stay in touch with your pre-approved clients, or do you have a different process you use for people that fall into that category? Because I know people are losing deals because they didn't follow up very well with someone between the time they first met them or got introduced to them and the time that they transacted.
Yeah, that's a really good question. So we've done 2 things. And I specifically this last year in our team meetings every single morning with my team, we talked about 2 things. Number 1, if I busted my butt to get the lead, got the referral from a new realtor, I don't care what it is, a past client referral. If I got the person, I had the conversation with them, and I got them to apply, we are not going to lose them. We're not going to lose them to lack of communication. We're definitely not going to lose them to lack of, being competitive in the market. We've got competitive rates and fees here. So we have to stay in touch with them. So number 1, every Wednesday we follow up with that month. If it's early in the month, it's the previous month's leads and pre-approvals. That's it. So we have a dedicated day for that. That's not that hard.
Just phone call?
That's a phone call. Yeah, it's a quick phone call. Hey, I'm just following up with you. I'm checking in with you to make sure that you still want to purchase in 2023. Or, hey, I saw you were out looking for homes. How is that going? Okay, so if they haven't applied yet, the conversation is, hey, I'm calling you. I got a couple minutes today to hey, last time we talked, you were really excited about buying your first home this year. Is that still in your plans? Well, no, Dan, we're thinking about, or yeah. Okay, the other part is, are they out looking at homes if they're pre-approved, just seeing how that's going. The second thing we do, I make a video every Friday. It's called Making Sense of Your Market. Make your own video, but send it out to your past clients, your current clients, your realtors, something about mortgage rates up or down week over week, and then a money or a mortgage or a real estate tip. That's it. It's a 3 to 4 minute video. Hey, just go look at the headlines right now. There's not a lack of information that we could be getting out to those people.
Yeah.
So those two things will help increase, will help keep you, tie you down through that incubation period, because dude, it's taken a lot longer to close a deal now.
Well, I just see it as you have a relationship, whether it be a past client or an active pre-approval, and your simple lack of following up is literally allowing you to just bleed out potential commissions that you are just not capitalizing on. Had you just simply stayed in touch with that person, and it's unforgivable in a market like this when there's so few opportunities to transact. There's less than there has been in years past. You can't miss those opportunities. And you guys, you have to be on top of your database. You have to be on top of your pre-approvals, because it's leakage. It's leakage of potential closed loans, potential clients, potential referrals, simply because of your lack of follow-up.
So one last nugget, and we'll shut this down. This is what I want you to do, because I'm doing this and I'm really excited. I learned this from a friend of mine in the industry. This month, and I'm going to start doing this monthly, I'm doing so it's called an updated state of the market for pre-approved clients. And it's a real quick Zoom. You're going to send it out, and all your pre-approvals can log in, all your leads can log in, and all you're going to do, it's a real simple agenda. Hey, I want to bring you up to speed on mortgage rates. Are they up or down? The state of the market on mortgage rates. Hey, I want to bring you up to speed on the market. We're seeing multiple offers in these areas. And then lastly, some things that you need to know about program changes. FHA, just heard your podcast. Yep. FHA just got cheaper. Loan level pricing adjustments just improved. And we have VA just reduced their funding fees. Guys, this is newsworthy stuff that we need to share with pre-approved clients.
Yeah, that's a new thing, it sounds like, that's starting. I love that.
It's easy, too. It's Zoom.
Yeah. And then would you send a recording to that to people that didn't make it?
Yeah, then record it and then just shoot that out to your database.
Love it. Yeah. Love it. All right. Well, that was a quick hit, you guys, but hope this was I know this was valuable information. So, like and subscribe to the podcast, share this with your friends in the industry, but really more than that, take this advice. We can all do better. Dan is crushing it right now in his mortgage practice. He's had some of the best years, top originator in the country. But the things he's doing right now are paying off. I see his numbers. So if you're not doing these things in your business, step it up. Don't let that business leak away simply because of your lack of intentionality and follow-up with your past clients and pre-approved clients. So thanks for coming on, Dan. It's great information. It's timely. And I hope you guys enjoyed this information. Until next time, this has been Market Shares. Take care.